Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing day yesterday, as we had a little bit of market movement, but not a whole lot. I think we're being a little bit quiet heading into the FOMC announcement. So we will talk today about a couple of areas of opportunity. We had a couple of small trades bounce off of our 15-minute levels from yesterday. If you're new to the channel, do me a favor. Click the subscribe button, hit the alert bell so you get notifications. And then if you are not new, do me a favor. Give me a thumbs up, hit the like button. Make sure that you're doing that. It helps me to know that people are actually watching, helps YouTube to know that human beings actually care about this deal. Real quick announcement, on Thursday evening at 7 o'clock, we're doing a webinar on how to trade options and why you might want to consider trading options. I talked to lots of traders that are just futures traders, right? On the Daily Market Commentary, we review specifically the futures markets and the currency markets of futures. But why are you just trading forex? Why are you just trading futures? You should probably think about expanding your network to other opportunities, and options just might be that. So tradersarmy.com/registration. All right, let's go ahead and dive in. S&P this morning, we are down about 7 points. Yesterday, we bounced off of this little rally-based rally area, came down, gave it a touch. We had a little bit of basing here before the level that didn't even allow for a 2-to-1. So I'm going to need to remove that level at this point. Leave me a comment down below if you're able to catch this little rally off of that move. So now, what am I looking at for today? Well, technically, I still don't want to be taking shorts because the big picture is not giving me that as an option, right? The big picture is saying shorting is risky. However, I've got a couple of really nice structures. So here's the problem: is what happens when I have really nice price structure, but the big picture is telling me not to be short. Well, the big picture is actually at this point, sure, we're at an all-time high, but the big picture is a bit more inconclusive. So, interestingly enough, the way that we're setting up is if I slide on this 15-minute chart, we have a really nice level here. This is the 2A. This is right around the 2 a.m. reversal, which is one of my favorite times of the day. If price indeed makes it back up into there, we have another one really good level right in here, which is another. So both of these are viable opportunities. But both of them are also shorting near the all-time high, so you take slightly lower degree of probability. I'm going to put them both here on the chart, and I will check the arrival into these levels to see if it's worth considering. Remember, shorting near an all-time high, there's always going to be that additional element of risk and exposure to be concerned with. And if we break through here, then we could be setting up for a really nice breakout to the upside. On these positions above the new all-time high. But that's what I would look at for today. Now, I think we could make it down to this region here. My problem with this region is the time of day that it was formed is not a great time of day. And I would prefer that our time of day be better if I'm going to, lean on this level right in here, right? That level's a pretty good level. The problem is it was formed around 5:15 in the evening, 6 o'clock in the evening, which makes it automatically a lower probability zone. Okay, so that's the level that I'm looking for in the S&P, is that area right in there. Now on the hourly chart, if we do fall a bit deeper, if the 4-hour definitely shows some weakness, because we are definitely seeing a slowing of momentum, and if we do show some weakness, then we've got a lot of demand levels that we've been waiting on. Demand levels that just haven't done anything, haven't been touched since their creation. So we're still waiting on price to come back into that area. And on the 1 hour, I don't really see any super clean demand levels to lean on below our current price. There's a couple of areas in here, but none of them I think that are great to lean on. So I might, be a little bit more cautious about some of the longer entries down here as well. And that's one of the reasons that I like these shorts. In the NASDAQ, we didn't have any demand really to lean on there either. So with that limited area of demand to lean on, there's not a whole lot, I think, for us to look at getting long off of. Now, once again, same picture exists here on the 15-minute chart with a good structure, which this structure right here sets up well. This area right in here sets up pretty well, better than I think than the S&P level, and that shows up on the hourly chart as a wick over wick area. Right, shows up right here as a wick over wick area on the hourly chart. The difference in the S&P and the Nasdaq is very small, right? Not a whole lot. Nasdaq's a little bit weaker overall, but you don't have to look at your momentum indicator to see that our momentum is definitely going down right through here as price is continuing to go sideways to up. So definitely showing that weakness in momentum. All right. Next, let's go to the crude oil. Crude oil staying right where it is. Those of you that looked at the iron condor position so far have been rewarded on it. There's a couple of opportunities in there to kind of still chop along sideways. No real trades have been added to my crude oil opinion because of that. Next, gold. So we got a little bit of a hit off of our gold level, this 15-minute zone. Remember, this is a 15-minute chart. So on the 15-minute level, we got a little touch and a move away from that area inside of gold, and then it kind of popped back up into the region. So since we've popped back up into the region, I'm going to turn it off. Let me know if you were able to catch some of that gold for a little bit of a run. That was a nice little move off of that 15-minute level. And so now what am I looking at? Well, going back to my 4-hour, right? I always go back to my 4-hour as my big picture. We are coming up against these areas of supply. Now, funny enough, that 15-minute level, the only reason we got there was because of the gap, right? And it was contract rollover that got us there. Yes, but we still got there, right? And what I found is that those contract rollover gaps do still have some validity to them. So now, when I look a bit higher at our areas of supply, there's not a whole lot for me to lean on from a supply standpoint, right? When I even go to the daily, there's not a whole lot up there to lean on from a supply standpoint. So bigger picture, I think that we've got a better opportunity for bullish trades. And so when I look at this from an hourly perspective, there's this little area right in here as a potential. Now, I don't love the fact that we came close to it and moved away. Lowers that probability just a bit, but I would also be looking here for breakouts, right? Look to see if price consolidates somewhere in this 1450 range and we get a breakout opportunity. Next, let's go to our bonds and currency markets. So inside of the ZN, which this is the level that we looked at yesterday, we came back down, got a nice little touch off of that area, came back and touched it again off of that level. So now I'm going to remove that level since it's been used twice. Let me know if you're able to catch that move. And on a 4-hour, we're still chopping sideways. Now, remember, we're going to be chopping sideways, just hanging out for FOMC news. So don't force a trade, I think, is probably the right thing to do. Inside of the Aussie, we did wind up breaking down out of this level that I talked about yesterday. 1, 2, 3, 4, 5, 6 candles, and price had gone nowhere. So essentially, you're sitting at a break-even stop out if you follow the 6-candle rule. If you don't follow the 6-candle rule, then you're still in the trade, and you have not yet gotten stopped out as prices would continue to trade lower. So nothing to add at this point, only because we've already started that move away. And we've just been very sideways range bound, so nothing to add on that one. Inside of the euro, we came close to this level. We didn't get filled. I still need to make sure that I have enough room in here in order to make at least a 2-to-1 profit margin between my opposing levels. So just keep that in mind as we get an arrival. No change from yesterday, though. Canadian dollar. Yesterday we were talking about this line here. Let's see if price can definitively popped through there. That was the fair price value area because of this, but ultimately we were still between our areas of demand and supply. So notice on this page, right, our bonds, the Aussie, the Euro, the Canadian dollar, no real changes to any of our levels because we're still just holding out, right? That tells us that the FOMC announcement's going to move the dollar. That's what that tells me. The FOMC announcement will move the dollar in some way, and that movement of the dollar, you don't want to be in front of that speeding train. The Great British Pound getting a little rally up, and may rally up to this little breakout area that we had from the other day. So a little bit of a breakout short right here. I'm sure some of you caught that short breakdown. I don't love this level right here just because we stayed in it a while. It was not a great time of day that it was formed. It's there. I don't love it. If you want to give that a try, I would say candle to candle is probably your best bet. I'm going to set an alert on that level just to tell me when price gets to there, because that will give me the ability to look at it without confirming myself to a trade. And remember that, right? You can always set alerts on these positions if price comes into them to let you know, okay, what does price look like as it's coming into those areas, right? So I'll set a couple of alerts up onto these positions, and it's very easy to set alerts, and then these alerts just go right to my phone as they happen. So just something to think about in some areas. I do that a lot. I don't usually show that inside the daily market commentary, but I think it's good for you guys to see that that's a great way to trade some of these. Now, those alerts are good for short-term intraday trading, but where they become really valuable is when you're trading options or equities, because you're looking at longer-term charts, right? You're looking at positions that may take a while to get there. So an example. So let's say I'm looking at, ADP, right? So I'll pull up ADP, which is a stock that we've used a lot. Now, I'm not using this one right now, but let's say that I was looking at ADP, and I've got a demand area down here that I like, but price is nowhere near that level. We've moved away from it a couple of times, but I still want to keep it in there. Well, I'll create the alert, and I may not look at this stock again for the next 3 weeks, but I don't have to keep an eye on it. You might have hundreds of alerts sitting out there on stocks for levels that are pretty far away. Tell me if this has ever happened to you. You see a level on a stock, let's use the stock for this example, and then you say, oh, that's a good level if price ever gets back there. And then you forget to look at that stock. And you don't look at it again for another 6 months. And in the 6 months that you didn't look at it, it's already hit your level, moved away for like a 6-to-1 profit, and it would have been a phenomenal trade. Well, because you forgot about it, it's not there. That's what alerts are good for. Those alerts are going to stay in there to allow you to reevaluate the position when you get into it. So that's all I have for today. Hope you guys have an amazing day. If you need anything, please send us an email, support@tradersarmy.com. Don't forget to register for the upcoming Thursday webinar. So go to tradersarmy.com/registration, and I look forward to seeing you there. Have a great day. See you soon.